Welcome to the Capital News. I am your host, Alex Karitis. Today is August 23rd, 2019. Thank you so much for joining me. Before we get started today with today's podcast, and we have a lot to cover, I have to give a shout out to my Mama. Happy birthday. A lot of birthdays we have here in the family in the month of August. And I just want to say, I'm sure a lot of us want to feel this way or would say this out loud. How true it might be is another question. But in my case, this is 100% true. My mother is a saint, and she is an angel. She is the nicest person you would ever meet. She is the biggest cheerleader for my brother, for myself, no matter what we're doing. And just like my shout out to my dad the other day, that support, that love is priceless. She puts herself last all of the time, for friends, for family, and on so many occasions when she shouldn't, when she should put herself first, she continuously puts herself last and puts her friends and family before her own needs a lot of the time. Again, a true saint and angel. She does everything for her friends and family, and just basically, there's not enough words to describe how much she means to the family, and everybody who knows her is a better person because of it. So we love you, Mom. Happy birthday, and many more. And just another thing, because I have like 2,000 relatives who have their birthdays in the month of May, so I don't get yelled at, happy birthday to all of you. I love you all. So today's podcast is really, where do we even begin? We said yesterday we were looking for the speech from Jerome Powell, the chairman of the Federal Reserve. Again, we don't like having to sit on pins and needles awaiting these types of remarks and speeches, but we have to do it because this is news. This is going to make the news. This is going to move markets one way or the other. We said if it was going to be something that was very positive, meaning very dovish from the Federal Reserve, that the markets would probably love this and they'd rally and really take off for the weekend. And if it was a little mediocre or perhaps even somehow hawkish, that the markets would sell off. Well, guess what? We had the speech, we had the remarks from Jay Powell, but we also had some statements from China. Now, we knew they were going to retaliate with tariffs. Well, they're slapping tariffs on another $75 billion worth of U.S. goods headed to China. Well, Thunder Thumbs, the King of Israel, and the chosen one, yes, I'm talking about President Donald J. Trump, he didn't like that too much. He didn't like what Jay Powell had to say. He didn't like what China had to say. And guess what? He had to become front and center. And he had one hell of a tweet storm today, ladies and gentlemen. And I don't know if this is rage, if this is frustration, if it's desperation, if it's all of the above, if it's some sort of act. Something is amiss. Okay, and we're going to get to that because the market sold off. They sold off drastically today. The S&P lost 76 points, a decline of 2.6%. The Dow Jones Industrial Average shed 623 points, a loss of 2.4%. The Nasdaq lost 240 points, a loss of 3%. The Russell 2000, the small cap, shed 46.5 points, also a loss of 3% for the day. The Dow Jones Transports lost 333 points, a loss of 3.3%. And the New York Stock Exchange lost 272 points, a loss of 2.1%. So it was only a week ago where we were talking about the Dow Jones losing 800 points, which it nearly lost again today. I believe it was probably 760 some odd points maybe at its lowest point today. And this was all near the end of the trading day. There was an acceleration at the end of the day, and then at the last really couple minutes, it was able to stage a mini rally, if you will, and was able to close at 623 points on the Dow. But nevertheless, these are the types of losses that we experienced just a week and a half ago. So what's going on here? We have oil, which also gave back what it had gained recently. We have WTI trading at $53.85 a barrel. And Brent, the international metric, is now below $60 again. It is trading at $59.10 a barrel. As you can imagine, there was a flight to safety. And so the precious metals caught a bid. We have gold trading at $1,529 an ounce. And silver remains above $17. and is trading at $17.16. Again, another flight to safety here. We had the U.S. 10-year Treasury yield shedding 5% for the day and is now yielding 1.53%. In the VIX, the Volatility Index gained about 19% and is now trading at $19.87. On the U.S. Treasury, talking about the yield curve here, between the 2 and 10, that spread which we were talking about, which really was the trigger that caused the 800-point loss last Wednesday, is once again inverted. But however, this time, on a daily close basis, it has closed. It has closed in negative territory for the first time since 2007. And I know I haven't mentioned this, but if you were paying attention to some of the media and financial mainstream media, we once again had the president's trade advisor and economic advisor, Peter Navarro, come out during this yield curve inversion over the past week or so and say that there was no inversion, that it didn't happen. You don't believe your eyes. Don't believe the data. This didn't happen. And I can imagine why he said this is because it did not happen on a daily close. It was an intra-day occurrence. Well, now he can't come out and say this because it has closed on a daily basis in negative territory. And again, for the first time since 2007. This is a very strong recession indicator. Period. Stop. End of story. This time is not different. The only thing different about this time is this recession is going to be worse than the Great Recession. This could be more like a depression. Okay? I'm not saying this to be hyperbolic. I'm not saying this to have an exaggeration effect on any of this. I am not a pessimist by nature. This is what I honestly believe. This is my analysis. Because if we're going to say that too low of interest rates for too long of a period is going to cause the Great Recession, well, we've had even lower interest rates for an even longer period of time that has caused even more malinvestment and more debt and leverage across the entire board. It's the everything bubble. How can it not be? This is just a logical question. This is just logical analysis. This is not me rooting against the U.S. economy. This is not me rooting against the global economy. I did not call for this. I did not ask for zero interest rate policy. I did not ask for quantitative easing. I did not ask for negative interest rate policy either. But that's the world in which we live. So you want to be prepared and perhaps benefit from it, or at least protect yourself from it? Or do you want to just keep wandering around like a zombie? I mean, these are serious questions. How are you going to respond? Because these are opportunities right before you. How are you going to act? How are you going to invest? How are you going to trade? What are you going to do? Now, I know when you have thunder thumbs out there, it makes it a little bit more difficult. I understand this because you're only ever one tweet away from success or disaster. You just don't know. That's too much power to exist in the hands of one individual. Same goes true for all the central banks around the world. But that's the environment in which we live. So you have to be prepared. That's why I tell you to stay diversified and stay vigilant, because you have to, especially in these times. A couple other things before we get to the Fed statements and the president's tweets. The other day we had the U.S. PMI, the Purchasing Managers Index, in contraction for the first time since the Great Recession. So you want to talk about jobs, 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 and a strong, strong, strong economy. How do you explain that one? Because that's U.S. PMI in contraction again for the first time since the Great Recession. We talked about this the other day, the government report that came out and said, well, you know what, folks? Yeah, the jobs, 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 not quite. 500,000 fewer jobs than previously reported. 500,000 fewer jobs than previously reported. This isn't small potatoes. That's 500,000 jobs. Because I can assure you, if it was 500,000 jobs to the better, you would hear nothing but praise and self-congratulations from the president himself, from Larry Kudlow, Peter Navarro, and any other lackey he wanted to send out there to the mainstream media to say, look how fantastic the Trump administration is for the jobs economy. Well, no, you don't hear a peep. You don't hear a peep about this because it wasn't a good number. This is what I always tell you guys. They are going to cherry pick anything that looks good, take self-congratulations on it, take all the credit for it. If it's something bad, they're either not going to talk about it or they're going to blame somebody else. And that's what we continue to see. And today, it was front and center, the Federal Reserve in China, which we have been saying here for months, are going to be the fall guys if you will, for this president and for this administration. Because they'll take credit for anything that looks good. If it's something bad, it's somebody else's fault. Okay? And the funny thing is, and we're going to get to this obviously with the tweets, and this is really where it kickstarts here. Donald Trump sent out a tweet saying, well, who's the bigger enemy? Is it Jay Powell in the Federal Reserve, or is it Chairman Xi? And obviously talking about President Xi of China. Now, wait. Stop the presses. I thought him and President Xi had a great, fantastic relationship. Isn't that what we have been told for the past year and a half? Everything's great. We have beautiful phone calls. President Xi sends beautiful letters to the president, and they correspond back and forth. There are tweets out there. I mean, you can find them on the record. China is not the problem. The Federal Reserve is the problem. Even though his campaign was predicated off of China being the problem, even though the first few years of his administration has been saying that China has been the problem, and that he says that China has been the problem for 30 years. Yet, nevertheless, there were still tweets out there days, weeks, and months ago that said, no, China's not the problem, the Federal Reserve is the problem. I couldn't agree with him more. The Federal Reserve is the problem. However, he's calling for the Federal Reserve to continue doing what causes the problem: lower interest rates and quantitative easing. This is why I can't stand for this. So how do you think China is going to respond to this now when the President of the United States comes out and says, yeah, President Xi, you're the enemy? Who's the bigger enemy? Federal Reserve or President Xi? It's a serious question. How are they going to take that? And if they don't take it seriously, then that takes us right back to my letter to the president and several podcasts where we call out the credibility of this president and his administration. Because if China's not going to take that statement seriously, if the markets aren't going to take that statement seriously, if the general population here in the United States is not going to take that statement seriously, then how can we take anything the president says seriously? So his credibility, that of the United States of America, is out the window because he is our ambassador. He speaks on our behalf. This is not the Trump organization. This is the United States of America, Mr. President. You can't have these breakdowns, these Twitter tantrums. If you want to blow off some steam in front of your staff or in front of your wife, that's your business and that's the place to do it. You don't do it on Twitter. Because then you make these statements, well, and we don't know. Do you mean it or do you not? Because he doesn't apologize. So is he going to come back and say, well, I apologize to Jay Powell and the Federal Reserve, they're wonderful people, or do I apologize to President Xi and all of the people of China? This isn't his MO. He's not going to do this. He's very unlikely going to do this, and he might believe if he does it, it'll make him look weak. And the Chinese, if that's who he apologizes to, if he does it, and I highly doubt he will, the Chinese will say, well, it's a sign of weakness. That might be how they view it. Because I'm telling you, in these trade negotiations, in this trade war, it's the hawks. It's the strong men behind the scenes who has Donald Trump's ear, like Peter Navarro. It's the advisors surrounding President Xi, who are the strong men who are saying this is China's opportunity to go against the dominant lion, the alpha male, the United States of America. This is their opportunity to strike at the head, to see if they can get some more power, more influence on the world markets. So this is what we have. And the other thing that continued on this very day, which I don't know if this is a coincidence, suspect, whatever. I'm going to talk about this too. But we've just had statements from Donald Trump and from Larry Kudlow and others saying that this is not a trade war, Everything's fine. The Chinese are going to be coming here to the USA in person to continue with these trade talks. And then the Chinese come out and they retaliate. More tariffs on $75 billion worth of U.S. goods headed to China. How is everything good? How is this not a trade war? And then Donald Trump today comes out and he says, well, you know what, by tweet, he retaliates, even though the Chinese were retaliating to our increase in tariffs. And I am by no means defending the Chinese, don't get me wrong. I'm just saying their retaliation was in was in a decision based off of what Donald Trump just did with increasing tariffs, even though only, a week later, he says, well, we're going to delay them. We're going to delay them because, they're supposed to go in effect just next week, the 1st of September, 10% on $300 billion worth of goods coming in from China. We're going to cut that in half for now, and we're going to delay some of them because of the upcoming holiday season, and maybe, just maybe, this will actually negatively affect the U.S. consumer, even though we've been told for over a year that these tariffs are not affecting U.S. business and the U.S. consumer, that they are being completely paid for by China. So why have to delay anything? Okay, so you have to ask that question. That's a logical question. The president is not going to be asked to answer that question. Will Peter Navarro be asked to answer that question? Will Larry Kudlow be asked to answer that question? Because they have to. Because they work for you, they work for me. These are the questions they have to answer. And if they don't like defending the president on this stance, then they have to resign. Because I'm tired of being lied to. And you should be too. We deserve better than this. This is the problem. This is the swamp. This is why Donald Trump was elected. Because we've been tired of being lied to. Okay? You got to be a different kind of boss. This is the new boss, same as the old boss. I'm telling you, folks, you got to wake up. You voted for the guy. I voted for him. But I'm getting sick and tired of this. This is a bunch of nonsense. And then you have these types of tweets that are moving markets like this. No question, a lot of this is market manipulation. Today, again, it's a rundown of a breakdown, frustration, desperation, a whole host of things. Something's not right. Something's not right. This is not how the President of the United States should be behaving. This is not how policy should be enacted and implemented. It just shouldn't be. It just not at all. I'm really beside myself on this. This is getting out of hand because this trade war is escalating. There's no question about it. We turn around, and again, by tweet decree, we now have our tariffs being increased on on Chinese goods coming to the United States. Of course, it was 25% on $250 billion. That is now going up to 30%. So 25% to 30% on $250 billion worth of goods. And then the tariffs that were just delayed, those are now going back into effect, obviously. And instead of it being 10%, it's now going up to 15%. So again, you have to ask yourself, Mr. President, you just said that 10% was too much for right now because it could affect the U.S. consumer in the holiday shopping season. So why would you now escalate this even further? And why would you increase the tariffs even further? So is it not going to hurt them? Is it going to hurt them? Who's benefiting? Who's losing? The fact of the matter is everybody loses in these trade wars. It's easy to point the finger at China and blame China. It's harder to say we have messed up in this country for generations of terrible economic policy from a fiscal standpoint, meaning presidential administrations in conjunction with Congress, and Federal Reserve policy, monetary policy, for generations. That's why we talk about ending the Federal Reserve and abolishing the federal income tax, because that will starve the beast. That will begin to solve these problems. That's how you do it. You want to continue with the Federal Reserve. You want to continue paying 15, 25, 30, 35, maybe even higher percentages to Uncle Sam. Be my guest. I'm not for it. I'm not for it. You work hard for your money. You want to keep 100% of it? I'd love for you to keep 100% of your money. Now, I'd throw in some consumption tax, and I'll do that. I'll give a better breakdown of the Caritas plan, if you will, to talk about what this country actually needs and how you'd go about collecting money for the government. They obviously need money, but how do you come about getting it? I can have that conversation, and we'll do. But what you earn from your labor is yours 100%. And your purchasing power should not be diminished by a Federal Reserve that thinks stable prices means an inflation rate of 2%. Give me a break. Give me a break. 0% is more stable than 2%. Yet here they come out, like today. And, the markets, the futures, I believe, were trading down a little bit, and then the speech comes out. The speech was actually released before Jay Powell actually gave the speech, so the markets had some time to digest what was actually going to be said. They started catching a bid once the news came out because Jay Powell said, the Federal Reserve stands ready to do what is necessary, to continue the growth in the U.S. economy. He said the U.S. economy is in a good place. It's in a healthy state right now. Of course, this is a bunch of nonsense, but they're never going to admit this. It's in a healthy state, but it does face significant risks. And of course, those risks that he's talking about has to deal with U.S.-China trade talks, a global economy that they have no problem saying is slowing down, but they're never going to say that the U.S. economy is slowing down, especially significantly. They're just not going to say it because they would be in the crosshairs for being blamed. So they're not going to come out and tell the truth. The president, his administration is not going to come out and tell you this. In fact, they continue to say everything's fine. So, I mean, you got to look at the facts. You got to look at the data. You have to look at this as objectively as you can. Pick up these pieces of this economic puzzle, put it together, and what type of picture do you see? And it's not a pretty one, clearly, and the markets don't like it. And now, compared to last year when you sort of had a little bit of fear in the market that led to that 10% sell-off and then, boom, that 20% sell-off in December, now a lot of that stuff, that fear that was sort of, well, maybe that's around the corner, it's now right now in our face. Okay? And maybe you had some people who were really forward-looking at that time saying, all right, here it comes, but you still didn't have the majority of the people on board saying, well, maybe there is a recession coming. Once you start, because the markets are driven so heavily by psychology, and once you really start to get the masses, the average Joe on board saying, well, you know what, my goodness, there might be a recession coming, that's when you start to head for the hills. That's when the concern starts to happen. That's when it can start to snowball and get out of hand. And then you compound this with a trade war. You compound this with these presidential tweets. You compound this with central banks running amok, getting ready to prime the presses like never before because they're going to have to, because of diminishing marginal returns. They are going to have to do, this is going to have to be so out of hand and out of control, it's not even going to be funny. If it's going to pack any type of punch, I don't believe it will, because I don't think they're ready to do what would have to be done in order to overcome diminishing marginal returns. They would have to print so much money. Quantitative easing here in the U.S., at the ECB, Bank of Japan, all over the world, it would have to be so large. It would make your head shake. It would make you, I mean, you couldn't even fathom it. They would almost literally have to print money and give it to everybody. That would almost have to be what they do. That's how bad it would have to be. And at that point, you say, well, what are you doing? What's the point? What's the point of money then? What's the point of prices? Because if you're just going to print money and give everything to everybody, what difference does it make what it costs? Because clearly you don't care about debt. So if you don't care about debt, then why do you care about what it costs? Just go get the damn thing. Makes no difference. That could happen. That could happen. We'll have to wait and see, but that's why you got to be diversified. And if that does happen, I hope you have some gold and silver in your portfolio one way or the other, because that will go through the roof. Another thing, we have the Bank of England head coming out today in his minutes, his speech, giving a claim that's saying, here, you know what, the U.S. dollar can be replaced with a digital alternative. The U.S. dollar can be replaced by a digital alternative. This is coming from the head of the Bank of England. This isn't small potatoes either. So what are they trying to do? Are they going to try to get rid of the U.S. dollar as the world's reserve currency? They're going to try to adopt some sort of Bitcoin, some sort of Libra, which is the Facebook alternative to Bitcoin. I mean, what are they going to do here? What are these governments trying to do? What are these central banks trying to do? Which is what we talked about the other day in All the World's a Stage. What is the end game? Is it complete control and dominance somehow? Politically speaking, economically speaking, what is the end game? Because there is an increase in the rate of chaos as far as I'm concerned and what's taking place here. Getting back to Thunder Thumbs, the king of Israel and the chosen one, he also stated in a tweet that gave me concern when it came across my cell phone. And check it out. I mean, check out the president's Twitter feed. I can't do it justice in just the rapidity of what he was saying and how fast he was saying it and just the words itself. But he said, I hereby order all U.S. companies to look for Chinese alternatives, meaning the supply chain. Get out of China and go somewhere else. Go to Vietnam, go to Japan, go to Cambodia, go to Singapore, come back here to the United States. I mean, what is going on here? Is this the United States of America? Is this free market capitalism? Is this free trade? What is taking place? Does the president have the authority to say this and actually act on this? Yes and no. Yes and no. Yes, he does, if he's going to come out and officially sanction China. Just like we have sanctions on Iran, we have sanctions on North Korea. The United States does not trade with these countries. So if he's going to come out and officially place sanctions on China, and he'd have to do this basically through Congress too. I mean, that way you could do it. But then guess what's going to happen to these markets? You're going to have one hell of a sell-off. One heck of a sell-off, if that's what the President of the United States does, and places sanctions on China. Would that be one heck of an escalation? My goodness. And of course, he shouldn't do this and shouldn't say this because he's not some sort of financial dictator. He can't just say that without having some type of teeth behind it. And of course, that teeth would be the sanctions, which could be construed, especially by China, as an act of war. It's most definitely an act of economic war. But I mean, look what sanctions have been doing to North Korea. Look what they have been doing to Venezuela. Look what they have been doing to Iran. This strategy of maximum pressure, where it causes inflation in those host countries, where it causes shortages of food and basic necessities in these countries. I mean, you think China's going to sit there and tolerate that? I mean, this thing could get out of hand very quickly. Some people may already argue that it is out of hand. I mean, I don't believe this was the best strategy for the President of the United States to adopt. We've had several podcasts on this, that tariffs weren't the way to go, not in my opinion. But he thinks they're effective. Maybe they're effective for a smaller country like Mexico. Maybe he can get them to the negotiating table. Maybe even got China to the negotiating table, but maybe the Mexicans were willing to deal and the Chinese are willing to play the long game because they're looking a quarter of a century down the road, half a century, 100 years, a whole century down the road. And Donald Trump's only going to be here for 4 years, maybe 8. Yeah, we can wait him out. We can wait him out if we have to. And that might be their strategy because they've been slow playing this thing since the beginning, since the get-go. So, to recap, who's the bigger enemy? Chairman Powell in the Federal Reserve or Chairman Xi in China? Ordering U.S. companies to look for alternatives to China. Even if they found them, folks, even if they came back to the United States, this isn't going to turn on a dime. This would take years to redo these supply chains. So what's going to be done in the interim? And increasing tariffs from 25% to 30% on $250 billion worth of Chinese goods to the United States. And an increase from 10% to 15% on the remaining $300 billion worth of Chinese goods to the United States. And China has increased tariffs on an additional $75 billion worth of U.S. goods to China. And then the Federal Reserve, once again, will continue to do what is necessary to support and sustain economic growth, even though they admit that they are shooting from the hip when it comes to trade. Monetary policy, ladies and gentlemen, is not a panacea. It is not a fix-all. I mean, in fact, it's going to cause more harm than good. It already has caused more harm than good. Going back, I guess I should say, to a zero interest rate policy, because anything down, anything lower from where we are today is going to get us closer and closer to zero. There's not much ammunition in the tank. There's not much tools left in the toolkit if they continue to do this. I mean, if it was that simple to lower interest rates and to print some money and all of our problems would be solved, well, then we should never have a problem. Because how simple is it? Lower them, issue some credit, put some money out into the system, boom, voila, everybody's fine. That's not how it works. It's not how it works. It's phony, it's fake, it's false. And again, you have the president pointing to Europe with negative interest rates. Well, I guess he wants them here. Doesn't care about people who live on a very fixed income. Doesn't care about people who are trying to save. Doesn't care about the investors who might buy Uncle Sam's treasuries looking for yield. And then guess what? they're going to have to pay for the privilege to lend Uncle Sam money. I mean, you can't make this stuff up. I really don't know who is advising this president or if he's coming up with this stuff on his own, but this is a true disservice to the American people. It truly is. I mean, this is scary because you have negative interest rate policy in Europe. That financial system is collapsing. Those banks are zombie banks. Insurance companies can't make money. I mean, we haven't seen anything yet. Believe me when I tell you, you have zombie banks in Japan. Do we need those here in the United States too? Is that what you want, ladies and gentlemen? Do you want to lend Uncle Sam money and have the privilege to do so? Meaning you're going to pay Uncle Sam to lend him your money? Because that's what negative interest rates are. Okay? It's asinine. It's terrible economics. It's out of control. It's out of hand. I mean, when is this nonsense going to stop? Where are the fiscal conservatives? Where are the Republicans? Nobody has a backbone to this. And the Democrats evidently are too stupid to bring up any of this. I mean, it's going to be very interesting, politically speaking, to see how the Democrats come up with some sort of alternative to what the president has just been saying, because he's giving them a win on a platter right now. But they're so stupid. It's unbelievable. But we're going to see what happens. We're going to see what Elizabeth Warren can say. We're going to see what Bernie Sanders can say and the whole host of others, even though we've had a few of them drop off here, as was anticipated and expected. But I mean, the president is almost, by some of his actions recently, it's almost as if he's trying to lose because he's just giving the Democrats a bunch of gifts. I mean, I can't believe it, but this is what's taking place. And we really need leadership in this country, and this president needs to be called out by his own party on this and by his own supporters, because enough is enough. We cannot have this divisiveness. That's just another thing that is going to tip the scales in favor of more chaos when we don't need it. We don't need it, ladies and gentlemen. We do not need it. So those are the tweets heard around the world for today. This is a Friday. We're going to see what happens. Real quickly, just another thing, food for thought on this is, one of the things that the president was obviously calling for and has been for a while is for the Federal Reserve, obviously, to cut interest rates. So it's interesting that today of all days, China comes out and says we're going to retaliate with these increased tariffs on $75 billion worth of goods, pretty much knowing that the Federal Reserve was coming out with their comments today and that the Federal Reserve, part of their calculus to lower interest rates is predicated off of the U.S.-China trade talks. Well, if that's escalation, that actually is a score, perhaps, for Donald Trump to get his way with lower interest rates next month when the Federal Reserve meets September 17th and 18th. So that's something to think about, too. The timing of all of this, is it coincidental? Is it suspect? Is it something that we need to pay attention to? Also, we have the G7 meeting this weekend over in France. So despite all of this chaos, you're going to have Donald Trump meeting with global leaders of the largest economies in the world. So that should be interesting as well. All of this is going to continue to move markets. I believe, technically speaking, we're getting close to some dangerous numbers, and if the market should break through these support levels on the markets and break through them convincingly, we are likely headed towards a retest of the December 2018 lows. And I imagine if we get back there, we're going to go through that too, because at that point, it'll be a true psychological factor. People are going to say, okay, you know what? Back in December, I could tolerate that loss because we were able to bounce back. I played the game. I hung in there. If I see this again in the course of a year, I'm leaving. I think that'll be the psychology of everything, and we could bust through those lows. Time will tell. I could be wrong, but we know that volatility is here to stay. That's what our volatility model has been telling us, and well, Nelly, have we been seeing it ever since we've had that call. So, ladies and gentlemen, thank you so much for joining me. It's been a pleasure having you as always. Please like, share, subscribe, get the word out, and leave your comments. We do love hearing from you. And have a safe and enjoyable weekend, and I will catch you back here either on Sunday with a week look ahead or back on Monday. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.